Quick question. When you look at your profit and loss statement, does it actually make sense to you? If you're like most service business owners, probably not. But it should, because your P&L is one of the most important tools you have to run your business. In this video, I'm going to walk you through how to read a profit and loss in just 5 steps using language you can actually understand. No accounting jargon. I'm Sean, CPA and founder of Ledger Ready, and I help small business owners get control of their numbers, even if accounting is not your thing. So let's get into it. First up is revenue, also called sales or income. This is the top line of your P&L, and it's exactly what it sounds like. All the money coming into your business. If you're offering multiple services, it's helpful to split them out so you can see which ones are driving your growth. For example, consulting revenue versus training revenue. Don't overcomplicate this part. Just make sure it reflects the actual money that you've earned, not simply what you've invoiced for, or worse yet, what you've been paid. Next, we look at cost of goods sold, or COGS for short. If you're a service business, this might not be as obvious, but it still matters. COGS includes the direct costs tied to delivering your service. Think contractor payments, software used just for clients, travel costs for on-site work. When you subtract COGS from revenue, you get your gross profit. That number shows what you're earning before your overhead. So the profit you've earned directly from the delivery of your service. Then we've got operating expenses. This is the bulk of your spending. It includes everything you need to keep the lights on. Rent, phone, marketing, software, subscriptions, maybe even your own salary. This is where it pays to categorize properly. If you lump everything into miscellaneous, you won't be able to spot overspending, areas to cut, or, dare I say it, tax deductions. Clean categories help you get deductions at tax time. I say it again. More on that in another video. Next is the bottom line, net profit. This is what you have left after you subtract all of your expenses from your revenue. Ideally, it's a positive number, but not always. If you're not making money on paper, you need to ask, am I pricing right? Are my expenses bloated? Am I investing in growth, or am I simply just overspending? Net profit tells you what you've actually earned, not what's sitting in your bank account, but what's truly left after the dust settles. Finally, zoom out and look at some trends. Is revenue growing month over month? Are expenses outpacing sales? Is your net profit margin improving? Margins are powerful. For example, if your revenue is $10,000 and your net profit is $2,000, so meaning your COGS are $8,000, that makes your net margin 20%. So your net profit was $2,000 divided by your revenue of $10,000. That's solid. Track that over time and you'll spot early signs of problems or find room to reinvest. So here's a quick recap of the 5 things to look for in your profit and loss statement. Revenue, what's driving income? COGS, your direct service delivery costs. Operating expenses, where your money's going. Net profit, what's left. And trends and margins, are things getting better or worse? Reading your P&L doesn't require an accounting degree. It just takes structure in a system that makes the numbers meaningful. If this helps, subscribe to my channel. I post weekly videos like this to help service business owners make smarter financial decisions without the stress. And if you want a free tool to help you forecast your revenue, expenses, and taxes, grab the forecasting template that I built just for service business owners. Again, it's free and the link is in the description. I'm Sean with Ledger Ready. Thanks for watching, and I'll see you in the next one.